Owning our own home since before we first got married. We knew that we really needed something of our own, where our rent wasn't going towards someone else's mortgage, where it was actually going towards our own.
All that money that you've put into rent has gone nowhere. You have no equity, you have no money saved. You know, we needed that place to belong for the children, that they have somewhere to grow up in and call home.
I love my house. Anytime I walk home down the street and I see the house, I say, oh, this is mine. It makes me feel good.
I was so tickled to be there because suddenly it was our place and everything in it was what we did.
Home ownership is the American dream. It is the dream that everyone wants to pursue. But it's also important to be an informed consumer, to be well educated about what it takes to get a mortgage and to understand exactly what is a good mortgage for you.
Whether you're buying a home, making repairs, or facing a major purchase, chances are you'll need to borrow money. To help you learn more about the loan process, the Fannie Mae Foundation presents Borrowing Basics. What you don't know can hurt you.
In the newspapers, there are all kinds of ads for mortgage lenders. It doesn't matter what your credit is.
Bad credit,
no credit. We'll get you a mortgage.
Bankruptcies, foreclosures, okay, just call us, we'll give you a loan, 24-hour loan. You know, it's like...
Pre-approval, fast pre-approval.
Yeah.
He was offering some special deal that was only going to last for 2 days, and I could borrow money to do the repairs on the house. He was going to take care of all my problems, and boy, did I need it. That's when the nightmare began. The roof was never fixed. I was behind on the loan. I was beside myself. Where was I going to go? What was I going to do? I was going to lose this house.
These promises of easy money, in many instances, are too good to be true. Most lenders in this country are very trustworthy. They provide mortgage products that really serve an individual's financial needs. But it's also important to know that there's some lenders that don't take that same interest in making sure that people really do make the right financial choices.
How do you educate yourself about the loan process?
The people who are most likely to get caught up by an unscrupulous lender are people who are uneducated to the home buying process, people who may not be familiar with what to expect.
I think the strangest thing of all was being in our mid-30s and really feeling so naive, feeling like little kids. We didn't really understand what we needed to buy a house.
A lot of these predatory lenders, they know that it's the first time that you're buying a home, or it's the first time that you're dealing with these financial situations. With the promise of easy money, you can end up paying more than you should in terms of interest rate, in terms of hidden fees and cost. And there's also the worst case, you might lose your home.
I think we knew that our credit was going to be a problem.
A lot of credit cards got us into a lot of credit trouble.
That's for sure.
Paying credit cards bills with other credit cards, having duplicates of every major credit card and every store credit card you can think of.
The problem was when I lost my job, there was no money to pay them anymore. We had read the story in the newspaper about a credit counselor. When we did meet with her, she explained to us what we needed to fix.
I'm a great believer in the fact that if you have impaired credit, you would be better off waiting a little bit, straightening out the credit before you move forward to buy a house. Because if you have impaired credit, your interest rate probably will be a little higher, which means that either your payment will be higher or you'll be able to buy less house.
She told us to start saving money and to wait 6 months. But my friend had this house to show me, and it was like a really, snatch it up now thing, and that's why we went ahead and looked at a house anyway, even though we were told we should wait.
When we first met with the mortgage lender, he was very personable, very friendly and upbeat, and he was going to get us a mortgage no matter what that night.
And it came down to, really at one point, do you think you could get $10,000 from somebody? And we're like, well,
It's why we're here.
maybe if we sold one of the kids, we didn't know what to say.
He said that by borrowing money from family and friends and putting that into the bank account so that we looked good on paper, it would kind of obscure the credit problems that we had.
If somebody tells you that they can make you look good on paper or falsify a document, don't walk out of the room, run. You are going down a path that you don't want to be in. There are federal offenses involved in here. You could end up losing your home.
When is an offer too good to be true? To learn more, call the Fannie Mae Foundation toll-free at 1-800-792-7300 and ask for a free copy of their guide, Borrowing Basics. What you don't know can hurt you.
The Fannie Mae Foundation's mission is all about providing affordable home ownership and housing opportunities. We want to be sure that everyone that wants to achieve the American dream of home ownership has an ability to do it.
This easy-to-read guide describes harmful lending practices and how to avoid them, and it offers practical advice on shopping for loans the right way, including how to calculate monthly payments and where to go for help. Get the facts. Call the Fannie Mae Foundation today at 1-800-792-7300 and ask for a free copy of Borrowing Basics.
I think our biggest fear was being approved for a mortgage that we weren't going to be able to take care of. We weren't going to be able to pay it.
And the mortgage that he could give us barely left anything for anything else. When we spoke to the credit counselor, she had said to us, what things are your children involved in? What things are you involved in? Paying with such a high interest rate, you're not going to be able to put the kids in soccer. If you have to budget it that much, then you're not going to be comfortable.
We want to be sure that you understand what the warning signs are for harmful lending practices. It's important first that you look out for loans that ask you to repay more than you think you're able to repay. Sometimes loans can be structured where your payments are really, really much too high for you to be able to afford on a monthly basis. So first of all, it's important to know exactly what you will have to repay over time and make sure that you feel comfortable that you can repay that loan.
We were afraid that we wouldn't be able to live the way we wanted to live. And
would we have the house a year later?
Exactly.
Or would we, be back renting again?
There's no point in buying a house if you're going to lose it.
Can harmful lending happen to you?
Lenders that don't have your best financial interest in mind are looking for the vulnerable in our community. They're looking for low-income families, minority families, the elderly, people that they feel they can really take advantage of.
We are aware that there are lenders who will call on the phone and pressure senior citizens, women who own homes alone.
I bought my house about 1.5 years ago. And since then, I have been doing a lot of construction to it. It's very expensive because of the fact that it's an older home. So when you want to try to fix something up, you usually have to take 3 steps backwards before you can take 1 step forward. I had received a phone call from a woman who, said to me, you've been pre-qualified for a home improvement loan. At the time that she was talking to me, I was kind of looking around the house and, thought about, well, it might be a good idea to fix all these things that I've been dreaming about doing or plan on doing in the future. I can do them today.
A home equity loan is a loan based on the value in your home. The value in your home is the difference between what you owe the lender and what the market value of the home is.
And then she said to me, what I can do is I can have the appraiser come out to your house tomorrow and he can tell you, how much your house is worth. I'm sure it's gone up in value and this, that, and the other. And he was there the next day, 7 o'clock in the morning, crack of dawn.
In the second mortgage arena, in that home equity or home improvement loan arena, that's the one area where it's very easy to get into trouble because a lender may give you a loan not based on your ability to repay that loan, but based on the fact that your house is worth a lot more than what you paid for it.
She knew how much I paid for the house because she had asked me and I told her. And she knew how much he said the house was worth. And there was a considerable difference.
They start sweet talking, and before you know it, you're agreeing perhaps to meet with them, or you're turning over your Social Security number on the telephone. That gives them instant access to your credit history, to your payment history on your existing mortgage.
She wanted me to give her the account number to my bank so that she could deduct the price of the appraisal out of my checking account. When she said that, that's when all of the red flags went up.
At that point, you're not interested, thank you, but no. And turn it off. There's no other way to say it. You have to be tough. You could lose your home.
So when I spoke to her again, I said, I still don't have any information on your company. I have nothing, not a brochure. I mean, she assured me, oh, we've been in business for 25 years, we've done this, we've done that. Well, if you've been in business so long, why is it so difficult for you to get me, something, anything?
There are some very specific warning signs that people should watch out